they feel now. Trying not to be stressed out.
Welcome back, family. This is Herbalist Kareem, and I'm about to give you information about actually how to pay yourself. Now, this one here might run over. I said this year I wasn't going to be doing videos over 10 minutes, but do more. Maybe I'll do part 2, maybe not. But this might run over because this subject is complex. But thanks to an individual hit me up and said, please, I talked to him over the phone, said, please, matter of fact, it was Facebook, said, can you please do a video concerning how do I pay myself as an employee? Now, see, I've said this before. There's several benefits of actually starting a business and paying yourself. I mean, you at your job that you have right now, if you become an employee at your business that you created, when you start one, you automatically now you become the first employee. Now you have a second job. Okay, that's power with that, because you know, when it comes to what you're gonna pay yourself, you want to do the right thing. Now, it's based on how much your business is earning. Okay, so let's get to this right here. Some of you guys, I actually teach corporations. So let me get to the point right here. I teach you to set up a C corporation. Some individuals, they set up a corporation and then they elect to convert it to an S corporation. Some people actually set up a LLC and they don't elect for S corporation. Some people set up an LLC and they elect for S corporation. See, all of that right there was like 4 different entities, and it was confusing, right? So if you want to understand the difference between the corporation, S corp, C corp, and LLCs, I'm pretty sure I have a video. Go look for it and watch it so you can understand. So I ain't gonna go into details of that, but I want to tell you that when you do an LLC, you pretty much you don't have to worry about payroll when it comes to setting up something through QuickBooks. If it's just a straight up LLC, you could pretty much pay yourself like this. You know, your company has a EIN number and you have your social security number, right? So when you want to pay yourself, if it's a straight up LLC and you didn't do anything with no S corporation, or you didn't set up no corporation, a C corporation, with just an LLC by yourself and you're the only owner, make sure every month, whether you're paying yourself twice a month, once a month, or weekly, however every month you're paying yourself, write yourself a check from your, your business account, your LLC account, to your personal account. That's a good way how to keep good records for your tax preparer, or if you're doing your taxes yourself. Okay, very simple way. So when it comes time for you doing your taxes, you know, the tax preparer or yourself, a K1 will get involved, and it's pretty much all the earnings that the LLC made, your company, will pass through you personally. And when you file your taxes, you can do it on the 1040. Everything can be listed right there. That's the simple way of explaining when it's dealing with just an LLC and you're the only employee. Okay, so that's a good way of keeping good records, and you won't have, it's not really complicated with that. But the more complex it is, to me, that's where more of the secrets is. Okay, I'm not telling you to convert your LLC to a corporation or drop it and let it go. No, I'm just telling you the power of the two. Don't think I don't have no LLC. I do, but the one that I actually do all my business through is corporation. That's the more long term. LLC, if you just like trying to make quick money and you're setting up domain names and whatnot, LLC is good. You know, simple. You don't have to worry about all that extra. So now when we want to deal with, checking the time right here, now we want to deal with actually a LLC that a person maybe is elected to go S corp. To me, S corp, well, not to me, is pretty much a lot more complex than it, but I'm gonna give you a simple version. When you are LLC and you elected to attach yourself with the S corp, or you create yourself, or you have a what is it called, S corporation, and you convert it to an S corp, or you dealing with straight up a C corporation. Okay, like I have. I do most of my business from a C corporation. So when you're dealing with one like that, it's a lot more when it comes to your payroll. You can't just write no checks to yourself. You can, that's part of it, but the other part is they call it double taxation. Okay, so you will be taxed twice, and what I mean by that is because you have a business, okay, that's an S corp, LLC S corp, or S corp, LLC S corp, or a corporation C corp. So when you have three of them entities like that, your business will be taxed, and the tax usually about like 145%. I don't know exact because my queen does it, our taxes, okay, and she don't even like doing them, so she wants to farm them out to someone else. But anyways, and also the business also gets charged about 6.5 of taxes. So the employer, which is the business, gets taxed for just having an entity. It has its own tax for having an employee. So if it's just you, the business is paying taxes, you know, and whatnot. Two different types of taxes. I think it's Medicaid or Social Security. Then right there, that's going to be withdrawal that the business has to pay. And the employee, which is you, whoever else you have, that employee that money has to be taken out as well. You know, taxes plus Social Security, Medicaid, all that right there has to be taken out of your check. So that's the difference between the two. And it's a lot easier for people not to do that manually by themselves. So most people will set up something like QuickBooks, or they'll get a third party to help them out with their payroll and whatnot. Or they'll, you know, or they'll kind of like get an accountant, a CPA to do it for them. So we actually use QuickBooks, okay? We learned it, we got into it, you know, she wasn't feeling it, she wasn't liking it. When that money starts coming in, you want to make sure, however your entity is set up, you follow the rules. So with the S Corp, LLC, S Corp, or corporation, you're pretty much still paying yourself through checks, whatever, how many times you want. But the salary has to be reasonable, okay? And IRS gets a little tricky with what's reasonable and whatnot. They kind of get into your business and want to tell you what your title is, and whatever your title you are, you better be paying that type of salary rate or hourly rate within that jurisdiction, the state, location. So if that title is a IT or something, and it's more narrowed down to like a senior technology or senior IT network administrator, okay? Did I just make that up? But I'm pretty sure you look that up, it comes up. They make about, I don't know, seniors, they make about $90,000 to $120,000 a year. So it better match up. The business making that has to be able to pay that employee that amount of money. Now, if it doesn't, what you're doing, creating checks, you know, you get yourself into trouble. So all I'm saying is that just make sure it matches up, and whatever salary you want to pay yourself, just make sure that everything coincides with each other, and then you can kind of plug that in with QuickBooks. My wife knows more about that. And when you plug in all that information in, and you making sure that the IRS is getting the business side taxes, and your personal is being paid as taxes, you know, it's being taken out, everything is syncing up. And then when it's time for you to do your personal tax return on the 1040, you can put all that information down, as well as the business has to do its taxes. It can put all that information down. But with an LLC, it's pretty much one form, 1040, and I think they merged a K1 with it, and it's a wrap. But the corporation, with a corporation, S Corp, LLC, S Corp, it has to do its own taxes, and then you personally as an employee have to do your taxes for the company. So it might feel complicated, but it's not. So just make sure you keep good records of paying yourself, and how you do that is just pay yourself with check from the business account, have some business checks, pay yourself, and then deposit it into your personal account. And that's how you actually could keep very good records. And then if you have your ledger, you make sure you write it down how much you paid and keep the receipts, how much the entity business, your entity business, paid the employee, which is you. It's not that difficult. And make sure you fill out. You don't even have to fill out a W-2, but that's just for the records of the company, which is your company, of showing the information of who works for you, which is you. Okay, so it's not that difficult. I just wanted to make sure you had the full understanding and get the facts that having another second job, or you've been an employee of your job, is very powerful, because when you're an employee, you have a second job to employee, it opens up doors to other things, like getting approved for a lot more things that you was not expecting to get approved for, because you got two entities and you're making more money as an employee. Okay, so Kareem wanted to just give you that tip. I went past my time. Hopefully I answered the questions. If I haven't, if you guys feel I need to do a part 2 and go in more specific, I will. But until then, y'all take care. This is chess, not checkers.
Give them something, give them something, give them something, if they're tired of being stressed out and been depressed about it.